Intel's latest earnings report, very much in focus, challenge quarter for the chip giant. I want to get right to Intel CEO Pat Gelsinger. Pat, good to see you as always. No matter what you report, I have to give you credit. Rain or shine, you're always here talking to Yahoo Finance after these results. We thank you for taking the time. I don't know how else to put this quarter. The stock is under a lot of pressure. Maybe we can go through this line by line. How much pressure is your business under right now?
Yeah. Hey, thanks, Sozzi. Always a pleasure to chat with you. The quarter, we landed the top line within the range we said. We had the challenges with the China export, but the big news, of course, was the bottom line. And for that, it was very much, hey, we accelerated the AI PC, and that had lower margins as we moved into our next factory to accelerate the ramp of it, which was negative. And obviously some other one-time things that we referenced as well. It was much more the outlook, where it was a weaker outlook as well, as we expect some of those challenges to persist. And we made a major announcement about our structuring changes as we look to the future. So overall, a lot of great product and process milestones. I'll say phase one of the journey, it's just stunning what we've been able to accomplish. And now time to take pretty aggressive steps on the financially sustainable model for Intel for the future. And that's what we've rolled out. We're very committed to the journey that we're on.
What surprised you on the cost front as you went through the quarter?
Well, clearly, as we made this decision to move into our Ireland factory from our TD factory, had quite a large negative impact on our margins from where we indicated at the beginning of the quarter. This is the right thing to do, get into the production factory, accelerate the volume ramp of our AI PC components, but it was a surprise. And that and some of our own operational things, as we said, this new operating model, Intel Foundry, Intel products, we're not mature yet, and we're making the steps necessary, to mature that rapidly. And overall, as we'd say, the market was a little bit softer. Some of our cyclical businesses taking a bit longer to recovery. Some of the inventory digestion that we spoke about as well in areas like our client business. So I'll say all of those put together, moderated our outlook, and we're taking the steps for a more sustainably, financially effective Intel for the future. This is the biggest restructuring of Intel, I'd say, since the memory microprocessor decision 4 decades ago. We laid out the new operating model, and we're taking decisive steps to execute on the process and product work that we've done to now combine it with an operating model to make us effective for the long term.
Pat, this is challenging stuff. This has to test every leadership principle you've learned over decades of doing this.
Well, anytime I have to go to my Intel family and say, sorry, we have to take steps to reduce our headcount, that is challenging. And we're going to do that with respect and dignity, because many of these are, just people that are so committed to the success of Intel. And we also realize we have to combine, that heart with making the decisions to make a healthy Intel for the long term. That's the most important thing that we've done. This is a unique company, a company that truly bends physics and chemistry in ways that are, barely seen possible until we've made it commonplace. And we now have to have this new operating model, Intel Products and Intel Foundry, for sustainable financial results that allow us to continue to execute that extraordinary vision, for decades to come. That's the tough steps that we're rolling out. And yeah, it's a challenging period, but this is what I signed up for and committed, to do with this leadership team.
The third quarter outlook too, below consensus as well. What don't you see getting better quarter over quarter?
Overall, we see the market recovering more slowly than what we indicated at the beginning of the year. All of our cyclical businesses see improvement, but less so. And we've seen that in the auto industry, the FPGA business. Each one of them are recovering more slowly. We have some inventory in the client business that we have to work through. The data center business remains primarily driven by the AI build out. So the CPU portion, the Xeon portion of that is more modest. So I'll say everything is moving a bit more slowly in the second half of the year than we would have indicated earlier. But the overall trends, we see more positive in the fourth quarter. We see slightly above right? Normal growth rates in the fourth quarter. And clearly, as we go into next year, things like corporate refresh, AI PC accelerate. Our product lines are stronger, and our new AI accelerators start to ramp more effectively. So we're still optimistic for the long term, but we realize that the second half of the year a bit more challenged than we would have indicated.
Is this a market issue or a product issue, Pat?
We see no market share changes than we felt at the beginning of the year. So we'd say every one of the things that I just said are market effects in that regard. We see no meaningful change in our market share position. Now, obviously, areas like AI have driven the discussion on where the investments in data center and cloud go. So even as our products get to be stronger in those areas, and we've launched our new products, the overall market conditions are ones that we haven't found as much momentum as we would have hoped. So each one of these is a market condition. And as we get stronger over time, we'll be better positioned to start regaining share in some areas like data center and accelerators, and continue the strong growth in our areas like AI PC. Of course, we have to also say about the foundry, and we're seeing a good momentum in areas like our advanced packaging area of that business. The 18A PDK release, this is sort of the starting gun for people to start their production designs. And so we're seeing a lot of energy in that area. But overall, market conditions a little bit more modest. And I think outside of the AI sector, you've seen that in multiple announcements.
Pat, I've followed your journey at Intel from day one. I've followed Intel for a long time. To be frank, I was surprised by the dividend cut and the capex cuts for this year and next year. Now, there's a lot of people in this country rooting for your comeback to be that beacon of hope to make chips in the country. But how do you, quiet their concerns that Intel is running out of time to turn itself around, and it won't be that beacon of hope to make chips in the country?
So, as we laid out our overall projects in the U.S. and the CHIPS agreements, they're all milestone based, and we're comfortably inside of the milestones that we have. So our plan to build out U.S. manufacturing unchanged. We continue to see great momentum with U.S. government, CHIPS program office, many areas as that unique national champion, and many of those things are seeing very good progress in those areas. So no change in those plans. The capex reductions are very much focused on building a more efficient Intel. And we've made many of the catch-up investments. We radically increased our capital expansion and capital investments over the last several years since I came back. We had no shell capacity, no site capacity. We had to catch up on our process technology. So all of those investments are ones that we can now build on as we build an efficient, effective foundry. And foundries manage their capital investment very carefully. And as we have laid out this new operating model of Intel Products and Intel Foundry, we should be scrutinizing those capital investments carefully. And that's the decisions that we're making as we do those. And some of that adjustment is just based on market conditions as well, where we see the growth rates in the marketplaces. So we would say our strategy is unchanged. We remain committed to being that world-class foundry, stepping into that space for a resilient supply chain for the world. Our plans for our build-outs, our CHIPS investments, no change in those, even as we make these near-term adjustments to be a more efficient supplier for the future.
You mentioned the headcount reduction, Pat. 15%, that's a large number, 16,000 people. How concerned are you that reduction will impact the culture of Intel and then slow up the turnaround at the company?
Given that we've now, gotten our process and product in place, we feel like we're in a position that we can make these next steps. We are doing that clean sheet work of what a world-class foundry looks like, what a world-class fabless company looks like. And those efforts to clean sheet the company are showing that we have many areas of inefficiency. We were still built like a IDM 1.0, as we've said, this integrated company. So being able to separate those and look at best-in-class companies has identified many of those inefficiencies. So I need to change the culture to be focused in those areas, and these steps are consistent with that, building on the momentum of the last 3 years. They're also surgical. We're looking business by business, function by function. What do we do in G&A and sales? How do we do our development? What's the best in class in the industry for each one of those? Which business areas do I need to go up? Which business areas am I over-invested in? So we'd say all of this is healthy for a sustainable Intel for the long term, even though it's challenging in the near term, and something we don't consider this, modestly. We consider this very seriously. These are members of the Intel family. We're going to treat them with dignity and respect, even as we go through these changes.
Lastly, Pat, for investors who maybe don't know you, like you and I have talked for some time, to be clear, you take delivering a quarter like this and news like this, which some people have not seen before from Intel, pretty seriously. You were at the company for a long period of time, for many years, have came back to turn the company around. This is not something where I imagine you take lightly delivering news like this.
In no way, Sozzi. I grew up at the feet of Grove, Noyce, and Moore. I feel as close to a founder that you possibly could of a 50-plus-year-old, company. This is my company. These are my people. This is the vision that we have laid out to transform and rebuild an iconic, company. This is what I signed up for. This is a challenging period, and with it, none of this is easy. None of this is taken lightly. We're going to treat our people the right way. But we're going to build a sustainable Intel in products and technology, and a sustainable Intel in our financial performance as well. That's what the market expects of us. We have to have a company that's good for the long term. That's what we're creating. That's what we've signed up for. That's what I've signed up for. And I'm committed to finish the job that we started.